You ask yourself, why does silver do what it is? Why isn't it performing? Why is gold doing this and silver isn't? Why is it being stepped on? Why? Well, why are 8 banks shorting this when China's flying around the globe buying unrefined silver and India is buying 10 times the amount that is available for sale in COMEX and 2.5 times the amount that's available on the LBMA? Why?
The market is not as transparent as it should be, and it's changing. With some of like the Shanghai Metals Exchange, and we're starting to see more price. The paper price, the digital price represent more the physical market, but it's still got a long way to go. So, if you want me to put a calendar on it, Jesse, I think that look, we've seen the price move from $16 to $30 over the last couple of years. I think we're going to see a dramatic move before we get to December 2025. I think the price is going to get way ahead of that. Is it $40? Is it $50?
Price level on silver, frankly, or on gold, except to say that the bull market in gold over the last 50 years, the bull markets, there were a couple of them, were 8 and 10-fold moves. Go back to mid-1970s to 1980, went from the mid-$30 level to $850, okay? Or from 2000 lows of about $265 gold, and you went to 1920 by 2011 over the next 10 years or so, okay? That's an 8-fold move. Well, we started from a bare low at 1,050. You do the math.
In today's episode, 3 financial experts, Michael Oliver, Andy Schectman, and Shawn Khunkhun, discuss the latest news in the precious metals markets. They highlight how recent trends have underscored the renewed interest in these metals as safe havens for investors. With volatility in the stock markets and geopolitical tensions, gold and silver are becoming increasingly attractive. The experts share their insights on how both metals have performed in response to global uncertainties, and they explore how these commodities may serve as a hedge against the risks in traditional financial markets. The discussion then shifts to central banks and the recent rate cuts, with the experts examining the potential consequences of these moves. They argue that rate cuts could signal deeper economic problems ahead, including inflationary pressures, which may further boost the demand for precious metals. Michael, Andy, and Shawn analyze how central banks' monetary policies have historically impacted gold and silver prices, and they forecast what may happen next if inflation continues to rise. Their perspectives also include how these rate cuts may push global economies closer to an economic collapse, especially in the face of mounting debt and slowing growth. Lastly, the experts delve into the master plan that BRICS nations, Brazil, Russia, India, China, and South Africa, seem to be formulating. They discuss how these emerging powers are positioning themselves in the global economy, potentially using gold and other resources to challenge the dominance of the US dollar. Now we'll show you the best clips. We watched hours of footage, so you don't have to. So hit the like button, smash the subscribe button, and turn on notifications so you do not miss out our daily recaps. Enjoy the episode.
And he said, look, China is flying all around Latin America, and they are paying way more than the West will pay for unrefined silver in concentrate and doré form, and then shipping it back and refining it there. Well, that doesn't come off of an exchange. That is, and China's the largest producer of silver in the world, and they've just became a second largest producer of silver, largest of gold, but they just became, over the last few months, a net importer. These countries are viewing commodities the way we've been talking about, the way that they would, and that the way that they are, and the West doesn't tell anyone, and so no one understands how significant this really is. But if it were so archaic, if it were so underperforming, then, and I keep coming back to Ed Steer's graph, that he showed, where 8 banks hold the largest concentrated short position in silver of any commodity ever traded in COMEX history. Why? Silver is more important than the West is leading on to, and that is why you see China flying around the world buying unrefined silver and shipping it back. That's why you see India buying 700-800 thousand metric tons over the last 3-4 years. This is a situation where silver and gold are far more valuable than the currencies that purchase it much of the world understands this. We don't. And to try and play games and try and bottom feed and get lucky, it's not something that I think will go over very well, especially with such a small participation of the U.S. public. If gold and silver are doing what they have been doing, let's forget about silver because it's been held down. But look at gold, and silver will surpass gold in percentage terms, I believe, before it's all said and done. But if gold is doing what it's doing with positive real yield, forget about the nonsense out of the BLS and all that stuff, but a positive real yield, a strong dollar, and waning participation by the West, what happens when that changes? What happens now that we're pivoting and we're going to lower rates and we're going to weaken the dollar and we're going to reignite inflation? And, does the public wake up to this and start buying? It's rocket fuel. But much of what we see in the metals market is illusionary, unfortunately, because it's the antithesis of the system that has been allowed to rise unabated versus gold and silver, which have been stepped on. And although they continue to move, I would argue stepped on to the point where they have not been allowed to fully express themselves to their real potential. Even gold, which has outpaced the S&P 500, and doubled the performance of the 10-year Treasury. Gold's 9.9% per year. It's up 20% this year. It's beating the tech industry. Where the hell is the mainstream media?
In today's news recap, Samsung's silver battery revolution, faster, longer range, cheaper. A groundbreaking new report from the Silver Academy has unveiled the potential of Samsung's silver solid-state batteries to revolutionize the transportation industry and drive a significant increase in demand for silver. The report estimates that the widespread adoption of this technology could lead to a surge in silver prices and reshape the global silver market. Samsung's silver solid-state battery technology offers several advantages over traditional lithium-ion batteries. Reduced weight, simplified material requirements, potential for lower costs as production scales up. The applications of silver solid-state batteries extend beyond passenger vehicles. The adoption of silver solid-state batteries across various transportation sectors, including cars, trucks, buses, vans, ships, barges, ferries, yachts, and airplanes, could create a massive demand for silver. The report estimates that the annual silver demand could increase by up to 25,400 metric tons if a significant portion of these vehicles adopt this technology. Such a significant increase in silver demand could have profound implications for the silver market. Rising prices, silver prices are likely to experience a substantial increase as demand outpaces supply. Increased mining activity, the silver mining industry would need to expand to meet the growing demand, leading to increased investment and job creation. Recycling opportunities, recycling silver from decommissioned batteries could become a crucial industry to support the sustainable use of this resource. The current annual global silver production is approximately 25,000 metric tons. If the estimated increase in demand due to the adoption of silver solid-state batteries materializes, it could represent a 101% increase in silver production. This would put significant strain on the existing mining infrastructure and potentially drive up silver prices. Samsung's silver solid-state battery technology has the potential to transform the transportation industry and drive a significant increase in demand for silver. As the world transitions to electric vehicles and other forms of sustainable transportation, the silver market is poised for a period of growth and opportunity. Now we'll show you the best clips of the latest interview, but first, smash the subscribe button, hit the like button, and turn on notifications so you do not miss out our daily recaps.
Investment demand for silver has been at 30% of the silver universe. The other 70% is going to industry. So during a bear market, we've had a 30% investment demand. During the bull market, what drove the bull market was investment demand. It was investors going out. It was on the back. If you go back to 1980, the gold was running from $35 an ounce to over $800 an ounce. The Hunt brothers cornered the market and the price of silver spiked. It was not based on photography or the big industrial components and usages of the time. In 2011, the price spiked, the move from $4 to $49. Again, it was on the back of investment demand. So my point here is, if in the last 100-year period, 98% of the time we've been in a bear market, okay? And during that bear market, we've had 30% of the silver market consumed by investors. But we've shown you that when we get into a bull market for precious metals, and we are unequivocally in a bull market for gold, it's hitting record highs in all currencies, and we know silver's got beta, and we know silver will outperform. It has every time. It's coming. It's inevitable. But there's one difference, Jesse, this time. And the difference is, by the end of 2025, so this is 15, 16 months from now, industry is going to consume all of mined silver. So the 850 million ounces that we mine as an industry on an annual basis is going to get 100% consumed by the growing industrial demand for silver. So in the last 3 years, we've had 250 million ounce deficits for silver already. Industry is growing usage. Investment demand will come. It's been 30% during a bear market. It's going to be a lot higher than that. It would be 2, 3, 4 times that during a bull market. And so we're setting up for the greatest squeeze in the history of silver, and it will unfold by the end of 2025. But we are already seeing, as you know, going back to 2022, 2021, 2023, the 250,000 ounce deficit is here, and it's growing, and it could be 500 million ounces this year. I don't always believe in the institutes and the reporting that we're getting, is it accurate, because really the market is not as transparent as it should be, and it's changing. With some of like the Shanghai Metals Exchange, and we're starting to see more price. The paper price, the digital price represent more of the physical market, but it's still got a long way to go. So, if you want me to put a calendar on it, Jesse, I think that look, we've seen the price move from $16 to $30 over the last couple of years. I think we're going to see a dramatic move before we get to December 2025. I think the price is going to get way ahead of that. Is it $40? Is it $50? I think as we go into 2026, we will be trading at all-time highs.
In today's news recap, will rate cut hopes ignite a silver rally? Silver prices remained stable on Wednesday, hovering around the pivot point, which is currently guiding the market's short-term direction. Unlike gold, which is nearing record highs, silver traders are adopting a cautious stance, with little momentum pushing prices decisively in either direction. This lack of volatility suggests that investors are not expecting significant market-moving news from today's U.S. Consumer Price Index report. The modest support for silver prices on Wednesday is largely due to expectations of a potential U.S. interest rate reduction and ongoing tensions in the Middle East. However, the market remains sensitive to upcoming U.S. inflation data, which could influence the Federal Reserve's monetary policy decisions. Despite these supportive factors, low demand from China continues to weigh on the market, potentially limiting any substantial rally in silver. Investors are closely watching the latest inflation data, particularly the core CPI, which excludes volatile food and energy prices. Expectations are for a 0.2% increase from the previous month and a 3.2% rise year over year. The data comes at a time of growing economic uncertainty, with some investors questioning whether the Federal Reserve should have already begun cutting interest rates. According to CME Group, traders are currently split on the likelihood and size of a rate cut in September, though the consensus leans towards some form of easing. U.S. Treasury yields edged lower on Wednesday as the market absorbed the latest inflation data and its potential implications for the economy. A confirmation of slowing U.S. prices could bolster bets on a significant rate cut in September, potentially driving silver prices higher. Additionally, geopolitical tensions, particularly in the Middle East, continue to fuel safe haven demand for silver. Now, we'll show you the best clips of the latest interview, but first, hit the like button, subscribe to the channel, and check our description for full vid credits. Enjoy the episode.
2008, and was somewhat overbought then. And so when the stock market finally did have a crash event in a year off of its high in that 2008-9 bear, gold joined in. It joined in for all of about 4 to 6 weeks, where they were, they're going the same way. They weren't going the same way before. And then shortly after that event, stock market continued on down through the first quarter of 2009. Gold was back at its highs by early 2009. So they again diverged. But there was that brief instance, and everybody remembers that, at least if you're around then. But if you go back through history and look at even crash events, like I happened to catch the crash in '87 before I set up MSA. I didn't catch it a big way, but I caught it to where it smacked me in the face with realization that, hey, we can measure some of these things. Okay. At that point in time, gold went up 9% that was week or two of that crash. Why? I guess nobody told gold was supposed to go down, when the S&P crashed. But no, it went up anyway. And during the 29 to 32 great bear market, there was no gold futures or freely traded gold then, but Homestake Mining, the biggest gold miner in the world then, had a massive bull market during that huge bear market. Okay, so opposite the stock market. So the attempt to link gold to stocks as a fear element. Yeah, pay attention to it. Yes, if gold were excessively overbought at that point in time, when the stock market decides to really have a puke, then maybe gold will participate to some extent to clean itself up some, or not. So don't think it is a rule carved in gold stone that it must follow the stock market. It certainly doesn't. Okay. Anyway, in the 2007 to 2009 bear trend, the stock market down the whole year and a half period, T-bonds and gold went up. From 2000 to 2002 bear market, gold went up, T-bonds went up. Okay. So here we are. I think we're topping out the stock market. Yes, we've taken out the 2022 price highs by about 10% or so in some indices. Some haven't even reached it. And if we roll over here, we think there's triggering factors in the S&P 500 and the NASDAQ 100 that will be engaged in the next quarter. If you merely ooze back down about 5% below where you're trading right now, those indices can't sneeze between now. So if September, for example, unfolds as a wobbly month, and we ooze back down several percent, you'll be in a position via our momentum metrics to trigger a structure, break a structure of support level that suggests you could open the Bombay door. Now, it doesn't have to be a crash, but it's likely to be a very sharp onset of major decline. And I think that the Federal Reserve and the monetary factors around the world will increase dramatically liquidity, artificially low rates. It's all the things they do, and that will benefit gold. So anyway, but we do see the stock market being in a very vulnerable position to where September better not be a wobbly, non-headline, but just wobbly a bit, pull back 3, 4, 5%, because you'll be in a position then to trigger certain momentum factors that say, gone. You'll go down. Anyway, so that's what we see in the stock market. And
what do you think about their analysis? Do you agree with their take on gold, silver, and the future of the global economy? Let us know in the comments below if you believe gold will hit new highs or if silver will soar past $50 by 2025. And don't forget to check out this next video right here. It's packed with more insights just for you. Thanks for watching, and I'll catch you on the other side.